All right, let's talk about crypto tax in Australia. So from the ATO website here, they define a crypto asset as a digital representation of value that you can transfer, store, or trade electronically. It also includes NFTs. When you buy, sell, or dispose of crypto assets in any other way, you have tax responsibilities. We're going to talk about some of those tax responsibilities. And you need to keep records for every crypto asset transaction. All right, so let's have a bit of a closer look at the ATO website here about what they say about how crypto is taxed in Australia. All right, so they say the first thing they're talking about here, you have to report disposals of crypto. So when you dispose of any crypto asset, you need to consider the capital gains tax. You may need to include a capital gain or loss on your income tax return. It's interesting here, they're pretty much treating it as a capital gain rather than income. He goes on to say you must report a disposal of crypto for capital gains tax purposes, and a disposal of your crypto includes when you exchange one crypto asset for another. So if you sell Bitcoin and you swap it out for Ethereum, that's counted as a disposal of the Bitcoin. When you trade, sell, gift, or donate crypto assets, and when you convert crypto to a fiat currency. So when you sell your Bitcoin and you swap it out for the Australian dollar. The Australian dollar being a fiat currency, a government issued currency. Now, transferring crypto from one wallet to another is not a disposal of an asset. So if you have your crypto on an exchange like SwiftX, hopefully not FTX, and then you move it out to an external wallet like cold wallet storage, then that is not a disposal of asset because you haven't sold the asset, you still retain ownership, you've just moved it from one wallet to another wallet. If you incur a network fee or like a transaction fee when you're moving your crypto from one wallet to another wallet, that fee is not an expense as such for income tax purposes, but that will be reflected as a disposal of that small amount of crypto that has now gone to a network fee. That will be treated as a disposal for capital gains tax purposes. Okay, so now we're moving on to actually working out your capital gains tax liability. So they say here, to work out your capital gain or loss, you need to determine the value of your crypto in Australian dollars. So that means if you've sold your Bitcoin and you've bought Ethereum, so you've sold the Bitcoin, that's the asset here that will have capital gains on it. You need to work out the Australian dollar equivalent of your BTC and then use that AUD equivalent in your tax return as part of your capital gains tax calculation. A capital gain or loss is the difference between the cost base. The cost base in simple terms is the purchase price, but it also includes any cost in ownership. So that might be any costs associated with acquiring it. So any network fees or bank fees on the exchange that you paid to acquire the Bitcoin or whatever the crypto asset is, any holding costs and the disposal costs. So the network fee or the fee that the exchange charged you for selling the asset, that will be part of the cost base as well. So it's interesting that they say here that the cost base can include the holding cost. So that could be, they're saying software that might be used to maybe keep track of your crypto assets, or storage costs. So you could probably argue that might include a cold hardware wallet like the Ledger wallet, something like that. How you would divvy up the cost of a cold wallet between different disposal transactions, that would be interesting. They haven't gone into detail about how that would happen, so that would have to be something that you would have to look at a bit closer. I mean, a lot of this stuff here, it's sort of playing catch up with the industry, and there has been some difference in how different countries have treated capital gains tax as income or capital, and some countries are even no tax at all. So it's a developing field and things are changing. So I would say speak to your accountant if you're not sure about any of this stuff. We can help you with that if you like, but it's also constantly evolving, and as the legislation changes and catches up with the industry, your treatment of the taxation could change as things evolve as well. So back to the capital gains formula is the difference between your cost base, which we just covered, and the capital proceeds. The capital proceeds is the selling price, what you receive, or the market value of what you receive when you dispose of the crypto. So in very simple terms, it is the sale price minus the purchase minus the holding costs. That's the basic formula. So just expanding on a couple of things we mentioned before, they're saying here, if you buy crypto in Australian dollars, then the amount you paid for that crypto, the Australian dollar amount, is included in your cost base. If you exchange one crypto asset for another, so you exchanged Bitcoin for Ethereum, your cost base is the market value of the asset in AUD terms, the Australian dollar equivalent. Now, if you have a capital loss, so that basically means you've made a loss on the sale, you bought it for $100, you sold it for $50, so that's a $50 capital loss. You can use that capital loss to offset against other capital gains. So if you made a loss on your Bitcoin, say of $50, like we were just saying, but you made a profit on some Ethereum of $200, then you can take that $50 off the 200 to have a net capital gain of 150. Now, when you add up all your capital gains, your net capital gains, if you come up with a net loss, you cannot use that to offset against your other income. So if you had a net loss, capital loss of $1,000 and you had income from your job of $30,000, you can't take that $1,000 off the 30 to make it 29. It doesn't work like that. If you have a capital loss and there's nothing you can offset it against, other capital gains to offset it against, then you have to carry that forward to however long it takes until you do have a capital gain in a subsequent year that you can then use that $1,000 loss to offset it against a future capital gain. So it can't be offset against income, it can only be offset against capital. And they've said here the CGT discount does apply. So if you don't know what the CGT discount is, it is your capital gains 50% discount. So the way it works with shares, as an example, is that if you hold an asset for at least 12 months, so if you own a parcel of shares for at least 12 months and then you sell them and you make a gain, you can then reduce that gain by 50%. So if you made a profit of $100 and you own these shares or your crypto for over 12 months, then you can reduce that $100 gain to a $50 gain. You basically cut it in half. And then what happens then is that net gain, that after you've applied your losses and your CGT discount, if it's applicable, so say you have a net gain after applying all that of $50, then that $50 goes into your income and is taxed at your marginal rate, the same as any other income, just like income you earn from a job. So that's a general example of how capital gains works. Again, if you're not sure what you're doing here, if you've got a lot going on and it's a bit complex, you want some help, reach out to us, we can help you with that. The next thing I talk about here is keeping records. Now, they want you to have very good records. So you need to keep records of all transactions associated with buying, holding, and disposing of crypto assets, they say. And they've got a couple of dot points here. They're saying set up a record keeping system. It can be a spreadsheet or it can be professional software. This is where you track all your buys, all your sells, all your holding costs. Scan digital copies of all your contracts, your buy contracts, your sell contracts, and file them away. So just set up a folder somewhere. Whenever you make a buy or you make a sell or incur some kind of holding costs, keep a copy of that contract, chuck the PDF in the folder for that financial year, and then you've got it there all ready for your accountant. And you need to keep your records for at least 5 years after the disposal of a crypto asset. And the last thing we're going to touch on in this video today is crypto assets as personal use assets. So what we've been talking about here is crypto in capital terms, not as in money terms, personal use terms. So they say you may be able to disregard some capital gains or losses from disposing of crypto assets that are personal use assets. Crypto assets are a personal use asset if they are kept or used mainly to purchase items for personal use or consumption. So basically what they're saying is if you have a crypto wallet on your phone and you're using your Bitcoin or whatever it may be, whatever crypto asset it is, if you're using that to go down the shop and buy your milk and pay your rent and do this and do that, if you're just using it as money, not so much as a speculation instrument, then you can argue here, they're saying that it could be a personal use asset and disregarded from capital gains, which is very interesting. How they go about really drawing that line there, that's easier said than done, and you could end up getting in a bit of an argument with them. I'm sure there will be some people here who would think that they're using their crypto for personal use if they're using it for spending in everyday transactions. Convincing the tax office of that, in particular, if you made a pretty big gain, might be another story altogether. But it's here, it's on their website, so it's an interesting fact. So what they say here is crypto assets are not personal use assets or money if you keep them mainly as any of the following. So if you've bought your crypto as an investment, so you're speculating on the price going up, then it's not a personal use asset. It's taxable. If you've bought your crypto in a profit-making scheme, so if you're doing it to make money, basically, then it's not personal use, it's capital, you're gonna pay tax on it. Or if you're using your crypto in carrying on a business, So here they don't really specify the difference between the concept of money, as in using crypto for everyday transactions. They don't specify here. It's a little bit unclear whether they're saying using it for money, for a personal purchase. They're saying that is a personal use asset. But what if you're using it for money for a business purchase, where the concept is the same? It's still money. It's not a speculative instrument. But they're saying here if it's used in carrying on a business, then it won't be a personal use asset, and then it will be taxable. So that's quite interesting as well. I'd like to see a bit more on that. We might have a bit of a deeper look into that one. And then they just say, in most situations, crypto is not a personal use asset and is subject to capital gains. And it's interesting here as well, the ATO at this stage is treating crypto as a capital gain, not an income gain. And then it says a capital gain on a personal use asset is not disregarded if it costs more than 10 grand to acquire it. So that's pretty interesting, guys. They're coming up with some guidelines here on how crypto is going to be taxed. That's where it stands at this point. It's pretty similar to shares, really. The one thing that's a bit unclear, as I was mentioning, is the concept of money when you're talking about personal use assets. So I would have liked to have thought that if that is the concept you're using, it should apply whether it's a personal purchase or a business purchase. If you're using it as money, money is money. But they're saying here, no, at least at this stage of what they put up on their website, that if it's used in carrying on a business, then you cannot disregard it. Only if it's used for a personal purchase, it may be able to be disregarded. But as I was saying, it's a very fast evolving field, and this is where they stand at the moment, but I wouldn't be surprised if there are more changes to come. So if you're not sure about how to tax your crypto, we can help you out with that. But other than that, guys, I hope you learned something here. I hope it was slightly informative and didn't confuse you even more. And hopefully we'll see you again. Catch you later.